Good evening. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Thursday, and we're now at the 20th of April, 2023, and a crazy tight markets. I mean, we're back down a little bit tonight in the gold and the silver. Copper also losing a little bit of steam, and even COPX is starting to weaken on the ETF. I pay attention to that. It's got to strengthen around if it's going to keep that uptrend it's had. Otherwise, everything backs off a little bit here. What does that mean for the dollar? Well, the dollar's just been hanging in no man's land for a bit, and that isn't helping or hurting the metals in any way. But we've left what I'll call trend trading for a little bit here. You'll see what I'm saying as we look at some of the markets. Metals are doing better than most, but when you get with me in my financial video, you'll see exactly what I'm saying. You're void of trends now in the stock indices, bonds and notes starting to get short covering. You have crashed hard in the energies, and wait till you hear my commentary there, because the fool, our President Biden, don't take that to be the way that it sounds. I don't mean it derogatory. I mean, he's fooling us. Yes. Now he's got his people coming out again saying, no, we're really considering this time buying crude if it gets back to $70 a barrel. Fool me once, you can do that. Twice, no. Okay. So here we are with gold and the looking at the market, hanging in here. And I got to tell you, with all the craziness this week, stock market breaks, energy's coming apart, gold has done pretty good. It's up a quarter point, $5 for the week. The action is weird when you look at the chart. As I break it in here, you got lower highs and lower lows. Does that look to you like an uptrend? I don't see that right here. But where's the battle? The red line is called the 18-day average of closes. And I use a simple moving average, by the way, on that. Markets that want to figure out what they're going to do next when they grow up often go back to this number and they say, what should I be doing? And you whipsaw back and forth. It's very common. Sometimes you've had a big move up, the market will come down and check it and go, oh no, I'm still in good shape, and you get your pop. That's not what's going on right here. This market's looking for direction right now. The swing line is down, but prices are basically staying over the 18-day average. So I have what I call my bias to the upside, the swing line down. I've got the market that hit the upper Bollinger Bands twice recently, couldn't do anything with them, thrown back. And I have momentum that is now corrected, past tense, an overbought condition. It was overbought up here. It never did embed. It just got overbought, kept hitting that number and backing off. How often did you hear me saying to you, this is a crowded trade as the market was up here? And I was saying every single analyst I'm seeing on CNBC and Bloomberg, when asked about gold, oh, you got to own it here. The gold is probably going up for new all-time highs, and it's very good. It's proving this is the inflation fighter. Well, I'm not disagreeing with some of that. I am disagreeing when they all say it at the same time. It gets crowded. And there's a way that the market handles that. It does a washout, and then you don't have all those people left. In the gold-silver ratio, you've gone from roughly 92 ounces of silver to get an ounce of gold to 79. And you haven't given it up much. But the silver chart is not pretty right here. The silver lost its embedded reading most of the time. What takes place, it's not the word all the time. Most of the time, when you lose the embedded reading, price and the 18-day average make a run at each other, and it's often hit. I don't consider this close enough. It might be that was, but I don't think so. I think it can still get to that 18-day average, but it's going to be at a higher price than the first run because that average is moving higher each day. You see what it's doing? Back here, it was lower, now it's higher. So the moving average is moving up to price is what's really going on. In the copper market, you're down to another support area. Look at how the 100-day average in green has supported the market. I believe the combination of that to the 396 is where the pros are covering shorts right now. I think they've begun the process right on down there. Momentum is down, trend is down. There's no buy signal on this chart. It could fall further, but this is where I think the short covering is taking place. I don't think you're getting the pros adding to their shorts. In the palladium market, it's every day you're hitting from right here the Bollinger Band. This is called that Gorilla Glue trade. The reason I named it that is for most of us, not the people that know how to get glues commercially, although Flex Seal claims it's stronger than now Gorilla Glue. For most of us, Gorilla Glue was what we would think of a really strong cement. I think Flex Seal's proving it could be even stronger. I mean, one drop picks up 3 tons. That's pretty impressive. I haven't seen the Gorilla Glue can do that. So I'm not going to call it the Flex Seal trade, by the way. I'll keep it with Gorilla trade, the Gorilla Glue trade. And the market just keeps hanging in there. It forces an embedded reading. It keeps the trend up. And it's almost impossible to jump in once that's happened. Where are you going to put a stop? I mean, you just got to wake up and say, I'm going to risk $500. I'm going to risk $1,000. I'm going to risk $2,000. I don't know what the number is. In the palladium, I think my work called that the first combination of the 100-day and the Bollinger Band is going to be a pretty stiff resistance area. And look at how you're just stuck looking for the next move in the dollar. I did a special report. Don't mind telling you, I am a long-term dollar bear at this point. I don't see anything that's really that good for it. I think that there's more pain in the U.S. economy going to come. I think the Fed's going to keep raising rates, but on a relative basis, there's other countries that are going to raise them more. I don't think they have a choice. We may be one and done. I am not in the camp in any manner that we're going to pivot and lower interest rates this year. I can see 2024. I don't see it in 2023. And I don't see the economy getting so weak that the Fed has to yell uncle and go, oh, we got to save the economy. We got to cut interest rates to do that. Nope. They're going to be of the camp that there's X amount of meetings left, and they're going to monitor each meeting, make sure that it's headed down to their ultimate target, which is 2%, which I don't think will hit. But I can make an argument you're going to be 3 or a bit higher than that. That argument I'd buy. 2% seems extreme at this point. I don't know what time will tell, but that's what I'm looking at. So you put it all together, you got to come up with game plans, and that's what I try to do for you. And that's what we do at Linn. We cover the whole spectrum of markets. We put out newsletters all day, but it's more than newsletters. Oral commentary, special reports throughout the day, option trade ideas, spread ideas, what the cash markets are doing across this whole spectrum. So if you're interested in getting into your mailbox, information on all this, graphs, charts, reasons for things, trade ideas, we're the source. How do you get it? We're going to give it to you for free for 2 weeks. You can decide if you like it or not. It's that simple. Our clients automatically get it. So how do you get this and how do you sign up for it? It's simple. You go to our website under free offers and you'll see this is right there. You can move your cursor right up here at any point as well. And what will happen is you'll see an icon, give it a click. It'll take you right to the free offer section and sign up for everything you want. Couldn't be easier than that. If you have questions during the day hours, Central Time, give our staff a call. They'll be happy to work with you. I'm Epstein. You have a great day. See you tomorrow.